Hello, everyone. Thank you for joining us today, and welcome to this educational presentation. Now, today I want to talk to you about next level candlestick trading. I would venture to say that most of you right now are using candlesticks in your trading or have used in the past. The only trouble is, it's been my experience that most traders are applying candlestick patterns incorrectly, and that's why you're not seeing the type of results you've been promised or you thought you'd get. For example, let's take a look at this chart, an NVDA. All right, NVIDIA. We're clearly in some type of a nice short-term uptrend, okay? Now, let's say you go to a chat room, and even at the top of this uptrend, the person in that chat room says, well, we're overbought, you should sell. This is where you are taught to look for a reversal pattern in the form of a candlestick. So you're looking to sell here because you're looking for the trend to end. But what if I told you that what I'm going to be teaching you today actually generated a buy signal right at the very top of that trend? Had you taken that, you could have potentially captured another 25 points to the upside the next 2 weeks coming into this week in November. So this is what we're going to be talking about today. And when we say about candlestick trading, we're talking about next level candlestick trading. Now, the beauty of this is that next level candlestick trading can be achieved on our platform, the PTS Primo charting platform, because everything is one click away. This is the platform that actually teaches you the unique way to identify and trade these candlestick patterns. So welcome to this educational presentation. My name is Steven Primo. I'm the president and founder of Specialist Trading. I've been trading now for 45 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor trading for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. As I always say, a specialist doesn't mean you're any more special than anyone else. It means that you specialized in making markets. So if you ever Google those pictures of the guys shouting and screaming on the floor where there was a bunch of paper all over the place, those gentlemen behind those large wooden podiums were specialists. In other words, if you wanted to buy or sell a stock, your floor trader would take your order over the phone and then walk up to the trader who specialized in making a market. So I did that for, as I said, 9 years. I made markets in IBM, Waste Management, US Air, and I traded through the crash of '87 and the bull market that followed. So I've seen and traded just about every market environment you can think of, straight up, straight down, sideways markets. And on top of that, I have actually traded just about any system, any strategy, any technique you can think of. All right. Most likely, even if you think something's brand new and never been seen before, most likely it has been around already. It's just been rebranded, renamed, and reformatted. So what we did with Specialist Trading is we formed it into an educational company where we just teach you all the things I've accumulated in 45 years that have high levels of consistency so that ultimately you can make your own trading decisions. It's been one thing that I've learned in 45 years. The only traders that are consistent and that are still trading are the ones that make their own trading decisions. And we'll talk about that more in today's educational presentation. Now, before we begin, once again, as always, we're required to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of examples using this advanced candlestick trading technique that I'm going to be sharing with you today. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, a good way to get more education on a daily basis, so you don't have to wait every week for me to give a free webinar, is to follow us on Twitter. Here's our handle right there. I would suggest copying that down. Every day I post different information, 5 or 6 different snapshots of signals or entries that our methods have generated, as well as little bits of financial wisdom. So there's lots of free education to get on a daily basis. So please feel free to follow us on Twitter. Now, I'd like to stay with this Twitter dialogue for just a second, because something interesting happened a couple of days ago. I posted, if you follow us on Twitter, I posted some, or I always do every day, post some snapshots of signals that have been generated using our techniques, but they're always after the fact. I will never post something in advance telling you, because what this does is it goes against our philosophy. What it does is it makes a crutch for you to say, wow, okay, there's a signal there, so I guess I should take it because it's going to be a winner, right? And I had someone send me a direct message on Twitter saying, you know, you're not a really valid website or valid trader because you're not posting these before most traders post before what they think the market's going to do, or if it's going to top out or bottom out, or what the perfect time frame is, and they let us know in advance. But you don't do that. So please don't do us a disservice by posting after the fact. Anyone can do that. And this is probably one of the most common observations I get from people who aren't familiar with what we do. You see, what I replied back to this person was, a good mentor does not trade for you. He teaches you how to trade. You see, this is the reason why, in my opinion, upwards of 80 to 85% of all traders fail. It's because you take yourself out of the game and you allow someone or something else to make your trading decisions for you. And this has been happening not just recently. This was happening when I first started trading 45 years ago. In fact, this is the way I was taught, and this is what I did for the first 2 years of my trading career. And guess what? I lost money following the so-called gurus, subscribing to signal services, waiting with bated breath for every person on TV telling me what they thought the market was going to do. You see, that's not real trading. I've said this before. I think I said it last week. But imagine a brain surgeon asking his or her nurses, how do you think I should operate? What do you think I should do? Why didn't you tell me what to do? Or imagine a lawyer saying that in court, leaning over to you and saying, hey, how do you want me to try this case? What do you think I should do? Or what do you like? Or imagine you're a pilot, and when you're taking a trip coast to coast, and he comes over the intercom and says, hey, does anyone know how to fly this? Tell me how you think I should fly it. But this is what traders do, and we're taught to do. We're taught to go somewhere, to a chat room, to a trading room, to listen to them on TV, to wait for the earnings, to wait for the jobless numbers, the economic numbers, and find out that'll tell us what the market's going to do. And this is really a disservice. This is why I will never post what I think the market's going to do. In fact, I don't know what the market's going to do. We teach you how to listen to the market so that it tells you what it wants to do. And then we just follow. So if you come here thinking today that I'm going to tell you what to buy or what to sell, just like that person who DM'd me on Twitter, you've come to the wrong place, because I wouldn't do a disservice to you like that. Remember, a good mentor does not trade for you. A good mentor teaches you how to trade. So think of any endeavor, think of any hobby if you wanted to learn how to do it. Let's say you wanted to learn how to golf, okay? Now, I'm not a golfer, so I don't know. But let's say you wanted to learn how to golf, all right? You get a teacher or some type of a trainer, someone to teach you how to do it, okay? And then ultimately, you've got to go and play golf on your own. He's not going to play golf for you, okay? It's the same way with trading. You've got to learn to ultimately make your own trading decisions. I can't be there with you every second to trade for you. So for me to post signals in advance would be doing you a disservice, because you may say, well, where do I get out? Where do I place my stop? Or where exactly do I enter? And that's what we teach you in the course. Everyone learns all of these things so that ultimately you can make your own trading decisions. As I said, in my 45 years, the only traders I know who are still trading are the ones that don't go to chat rooms or trading rooms. They don't have signal services. They don't listen to earnings or any fundamental news or listen to the guys on TV. What they do is they have a very simple plan in place, and they just follow it. Those are the ones that are still trading. So that's my goal, to get each and every one of my students to that place, okay? So as it says here, my goal is not to force feed you signals on a daily basis, but to teach you how to trade with a specialist edge. When I was suffering and really struggling my first 2 years, my mentors, who were specialists themselves, saw how desperate I was and taught me this philosophy. And that's what has sustained me now, going on over 4 decades. So hopefully I can do the same with all of you. Now, before we begin, a few announcements as I always make. Remember, we are recording this, so if you have to leave early or if you're having technical issues, don't worry. You will be sent a link to this recording so you can watch it whenever you like. I want you to ask me as many questions as possible, but please wait till the very end of class to ask any questions. I have a lot of slides to share with you, and if we stop for every slide, we'll be here far too long on your Wednesday morning or afternoon. So please write it down and try to remember it. I promise I will answer all questions at the end. And then lastly, this is a static PowerPoint presentation. Even though we're over the Zoom platform, this is not an interactive presentation. We won't be talking or showing our videos of ourselves in little boxes. So please remember to disable all microphones and cameras before we begin, all right? Okay, with that said, let us begin today's educational presentation. We're going to be talking about how to achieve next level candlestick trading. Remember, most traders use candlesticks and apply them, but in my opinion, they're using them and applying them incorrectly. So in order to achieve that next level, we have to apply a two-step process. All right, the first thing we need is a strategy that's based on candlesticks, but is a non-traditional one. And that brings us to candlestick strategy number 5. So let me share with you some of the highlights of this particular method. It's our premier candlestick strategy at Specialist Trading. Why? Because it's a non-traditional continuation method. And I'll explain that in just a few seconds with some slides. The beauty of strategy number 5 is that you can apply it to any time frame, any market, or any direction. Now, how many times have you purchased a strategy or gone to some website and they promise the world and they say, this works great. And so you say, oh, great. So I can use this on another market. And they said, oh, no, this is only good for stocks. If you want to purchase something for trading the Forex, that's an entirely different strategy. Or if you want to use it for intraday trading, well, now we have to go into an entirely different mode. Well, there's nothing you have to change here. So if you trade multiple markets or multiple time frames, guess what? The same rules apply to all. Now, if you decide to become a student of mine in the strategy number 5 course, it is required that you paper trade. In fact, what I'm going to be teaching you today, you may want to apply right away, but please paper trade. Do not just jump in and say, hey, well, Steve said this in the webinar, so I guess I can just start doing this as soon as it concludes. I'll start trading like this. No, I want you to first paper trade so that you can fully understand the process I'm going to be sharing with you today. Now, our edge is consistency. So what exactly does that mean? Because I know a lot of students think, well, Steve, if it's consistent, that means it has a lot of winners, right? Well, sure, but that's not what we're focusing on. Consistency means an awareness of losses. It's actually the opposite of what most people think. So what that means is we will have losses from time to time. That's okay. But a consistent method is one that's able to recoup those losses. You see, you don't want a method that has a loss, that keeps going more and more, and pretty soon you've gone 2 weeks without a winner, right? That's, I'm sure a lot of you have gone through that. And you've wondered, boy, why did I waste all my money on this thing? Sure, I have a couple of winners here and there, but most of the signals are losses. That's not a consistent method. What you want is a 2-step forward, 1-step back approach, all right? The 1 step back are the losses that are natural, that happen all the time, and the 2 steps forward are the wins, to be able to recoup those losses and then get in the profit mode. So I'm happy to say that all of our methods and techniques are very, very consistent. Okay, so those are the highlights of strategy number 5. Let's look at an example here. This is an older chart for educational purposes only in FOSL. All right, so obviously the stock is going lower, okay? Now we've all been taught with traditional candlestick trading to look for some type of bottom or reversal, all right, at the end of a trend. In this case, look for something to end at the bottom. And what do we have here? Let's say we took that 10,000 course on support and resistance that follows the institutions, and it says, hey, this is major, major support. This is where all the institutions are buying. That's why it's holding right here. And everything is lining up and you got to buy. And on top of that, you took that course on candlesticks, and what do we have? This is a bullish engulfing pattern. That's an extremely popular pattern, very simple to identify, and also very bullish, as the name implies. So you say to yourself, wow, we've got these two things lining up together. All right, looks like a major reversal. So you step in and buy, and you're excited because you say to yourself, boy, it's probably going to go up and make new highs somewhere up here. So you're in the trade, and this happens, right? Look familiar to anybody. This is why we say the traditional way of trading candlesticks is very inconsistent. I know, because this is the way I was taught when I first started trading candlesticks 4 decades ago, and it really didn't seem to work very well, okay? So why is that happening? Well, first of all, we're always taught that candlesticks are reversal patterns, so we're going against the trend. In this case, it's an obvious downtrend. But when you go against the trend, that's where you hit all these losses, because trying to pick a bottom and trying to pick a top is very difficult. So we're not going to trade it in the traditional way. We are going to trade candlesticks going with the trend, as opposed to trying to find a bottom or a top, trying to find a counter move. Okay. Now, most traders say, okay, well, that's easy. I can see here that we're in a trend, so that's not too hard. What do I need this course for? Well, sure, everyone and their sister has a different idea of what the trend is, and they all have different ways. You know, some use indicators, some use higher highs, higher lows, others use different time frames to line up. Okay, those are all well and good, but they're not that consistent, and they're very mediocre. and their performance. What we need is something that will tell us in advance that we're in a downtrend, not just right here, but let's say up here. How could something tell us in advance that we're in a downtrend? Well, this is part 2 of taking your candlesticks to the next level. This is when we apply the second edge, and that's the pet D. This is a tool I was introduced to some 4 decades ago on the floor of the exchange. At that time, we used to call it the formula because it was a formula that you had to calculate by hand or on a hand calculator. The only trouble is it's very cumbersome, and by the time you calculate it, it's time to calculate another bar, and it's very difficult to do. So we've taken all of the hard work out of it for you. And what we've done is we developed it with the help of high-speed computers and with programmers into a color bar tool. That's how we determine what the trend is, and that's how we can find out that the pet D is an early trend detector. It is the most sensitive tool I've used in over 4 decades to tell me what the trend is. And so that's a tremendous edge to have. Once I apply this with the candlestick strategy number 5, it really gives me a very strong edge. For example, let's look at this older chart here in Aetna. Obviously, we're in an uptrend, okay? Higher highs, higher lows, fits the traditional way of finding a trend. The only problem with this is that most of us don't determine we're in a trend until we get somewhere up here, right? At this point, we say, okay, we're definitely going higher, time to buy. And maybe you even jump in and buy right here, thinking it's going to explode. So let's say you jump in and buy, and look what happens. Go straight down, right? Well, what happened if we applied the pet D? Remember, the pet D is a color bar tool, and we'll color the bars either green or red. So once we apply it on our platform, we see here that we knew well in advance that when we had consecutive green bars, we knew that the trend was going to be up. All you need are 3 green bars to tell you in a row that most likely the trend is going to go higher. And then when you get the opposite, 3 red bars, well, then that's telling you that the trend is over. Now, remember, the pet D is not a system. It's not a strategy. It's not a predictive tool. It doesn't tell you how high or how low something will go. It's just an extremely sensitive indicator that basically we call a translator. It literally translates what any market, what any time frame wants to do on a tick-by-tick basis. So what a tremendous edge to have. So how are we going to use this? Well, if we get a buy signal with a candlestick, we want to make sure that it's colored green. And if we get a sell signal, we want to make sure it's colored red. That's how simple it is to apply these 2 major tools together. For example, let's look at that old chart we looked at before. Now, using traditional worn out methods, we would have said, well, this is a buy right here, a bullish engulfing pattern, I got a buy. And then, we all know what happened. But if we apply the pet D on our platform, it's as simple as just clicking it on. We see that the colors change. Now, in this instance, remember, all you need are 3 red bars to tell you that the trend is down. And we knew well in advance, way back here, that the trend was going lower. So because of that, there was absolutely no need to buy, because we would have needed to see that these bars are green, and they weren't green, they're red. So therefore, we did not buy, and we saved ourselves a lot of money because we didn't have any type of a loss. Now, what happens if we would have applied the first component, which was strategy number 5? Well, on our platform, once again, simply click on strategy number 5. Even though we teach you all of the rules, and this is not a black box, you know what to look for, you can check your work by clicking on in the drop-down menu signal arrows, and it will tell you where the signals are. You can check your work. And you would have seen that there was a sell signal way up here that you could have taken advantage of, and then another one right here. So this is the way most traders apply candlestick trading, and this is why there's no consistency in that. This is the elite way to trade candlesticks. This is in my opinion, a much more consistent way by trading them with the trend. And the best way to find the trend is with the pet D. Now, you've seen the power behind both of these edges, strategy number 5 and the pet D. This is what we call next level candlestick trading. In fact, we've got a name for it. When we combine these 2 techniques, we create what we call our candlestick combo. And I'm happy to say this is one of our most successful and popular packages we have at Specialist Trading. We have people trading this around the world in over 115 countries and in every state in the United States. It's that popular, and it's an extremely consistent method when we combine strategy number 5 along with the pet D. So let me share with you some recent examples. All those examples were older just for educational purposes. Let me share with you some things that happened within the last month, some of them within the last week, okay? And remember, we teach you what to look for. This is not a black box. In the course, you learn all the rules. You know what determines a strategy number 5, buy or sell signal. You know where to enter, you know where to exit. We give you upwards of 7 different entries, 7 exits, 7 stop placements for you to choose from. Because remember, you are making the decision, not us. We are just highlighting a high probability point of entry. It's up to you to decide where I want to enter, where I want to place my stop, where I want to exit. That's why we never post anything in a signal service or on Twitter, because that's for you to decide. I want to get each and every one of you to that point, because that's when you will become a consistent trader. So you're going to see recent examples now, and everything is taken and displayed from our platform. Once again, the PTS Primo charting platform I developed with Pro Trader Strategies, my sister site, excuse me. And this is the educational platform that makes candlestick trading simple. Okay, so let's look at this first example here in GILD. Obviously, we're in an uptrend, right? Now, traditional means of candlestick trading say that, well, we want to find candlesticks that go against the grain, because candlestick patterns are reversal patterns. So obviously, we're looking for something to sell here. But if we apply strategy number 5, we see that at the very high, once we click on signal arrows, at the very high of that short-term uptrend, we're generating a buy signal. Most traders say, how can we do that? That goes against everything I've been taught. We're supposed to have buy signals at the low and sell signals at the high. But remember, that's traditional candlestick trading that isn't very consistent. So we're going with the trend. But how do we know for certain that we're in an uptrend? Actually, it's kind of a lazy or slow upward moving trend. So we confirm with the PET D. Click on the PET D, and we see that, yes, above the arrow, the bar is outlined green. Now, a lot of students have trouble. They say, well, Steve, but the bar is white. Yes, but it's outlined green, telling you that the trend is up. Now, these dark green days mean that the day closed down. But even though it closed down, the bar is still colored green. So what does this mean? It means that even though we have a down day, the trend is still up. So those are high probability setups. If you want to buy, you can buy when it's down and when it's green. So we have a strategy number 5, buy signal. If you're a student of the course, you have numerous ways in which to enter. You have numerous ways in which to exit. You have numerous ways in which to place your stop. Remember, you're in charge of your own trading, not us. And you can actually say, I'm not going to take the trade. Don't feel comfortable about it. Don't like any of the risk parameters associated with it, so I'm not going to take it. That's fine too. You see, but you're in charge. It doesn't matter. So had you taken the trade, well, guess what? 18 points coming into this last week in November. And if you missed that, guess what? There was another buy signal right here. Let's look at EXC, all right? Exelon Corporation. Obviously, we're in a downtrend. So what have we been taught? We've always been taught, well, look for some type of bottoming formation with a candlestick reversal pattern, okay? But with strategy number 5, it's actually telling us, once we click on the signal arrows, that there's a sell signal there. Most traders have difficulty with that. They say, how can I sell at the bottom of a trend, the very low? I mean, Steve, this is where I'm taught to look to buy. Once again, this is one of the reasons why most traders fail. We're always taught things that are not very consistent, because how do we know how low something will go? We don't. No one knows where the low is. No one knows where the high is. So in order for us to be consistent, we have to get rid of this notion of trying to step in front of it and think, oh, I've picked the top. I know exactly it'll stop here because that $10,000 course I took in support and resistance tells me it's got to stop right here. That's silly. Trading is simple when you go with a trend as opposed to trying to fight it. So we have a sell signal here generated by strategy number 5. Now we want to confirm it with the PET D just to make sure. Click on PET D, and obviously, since we've been going lower, all the bars are red. So this is a high probability candlestick combo signal. Should you decide to take it, well, even though it's not an expensive stock, it fell 5 points in the next couple of weeks. And percentage-wise, I mean, that's a 12 or 13% drop. Here's an example we shared with you earlier in NVDA, okay, NVIDIA. All right, obviously, we're in an uptrend, and let's say that guy in that chat room says, you're overbought. You got to get out of this. You got to sell. Well, we never take that notion at specialist trading, because we always want to be in sync with whatever trend we're trading. We never want to go against the trend, okay? So we have a strategy 5 buy signal right here at the very top. We apply the PET D, and we see that the PET D is colored the bars green starting right here, and then look what happened, 25 points. See, trading is as simple as that. You have a high probability structure in the form of your strategy, and then confirm it with the PET D, and that's it. You can become very consistent just applying that and using your own parameters for entry, exits, and stops. Here's an example in Meta, all right? Looks like we're in a range market here in September, a couple of months ago. Nothing really happening. We're always taught to stay away from these type of markets. This is where you get whipsawed, okay? Well, maybe true, but if we apply strategy 5, we see that we had a sell signal right here. Now, let's say you're the type of trader that doesn't like a lot of risk. You don't want to hold a lot of risk overnight. You feel uncomfortable. That's great. That's fine. This is what we encourage. We want you to determine how to trade based on your persona, based on your risk parameters. So you have roughly about 6 or 7 different stop placements to choose from, some more riskier than others, and you decide to use a very tight stop where you don't risk a lot. Well, most likely you would have been stopped out, even though it was confirmed red. So you would have been stopped out with a very tight stop and you lose 8 points, okay? Now, this is where traders usually say, hey, this stuff doesn't work. Gosh, you know, I became a member of this course. I became a student of that Steve Primo guy, and my first signal I start trading doesn't work at all. And then people want to, you know, get a refund, or they say, hey, this doesn't work. What's going on? This is what we mean by consistency and awareness that you will have losses from time to time, but a consistent method is one in which it's able to recoup those losses. So instead of going sulking in the corner and playing the victim game the way most traders do, you have to still be watching to make sure that everything is okay and that you may be generating another signal. Because if we follow it, we see that, wow, it eventually did go down. And if you had sat there playing the victim game, you would have missed another signal right here. And you could have gotten right back in and potentially made 50 points. So do you think you could have recouped that 8-point loss you made? Okay. Now, that's potential. We're not saying everyone would have made 50. Maybe you made back the 8 and you said, okay, I broke even, I'm getting out. But this is a perfect example of what we mean by consistency. An awareness of losses, but a strategy that's able to recoup those losses sooner than later. Let's look at Amgen, okay? All right, we've had a nice steady uptrend, but it looks like price is rolling over, but strategy number 5 generated a buy signal here. We apply the PET D, we see it's confirmed. All the bars remain green, even though we have a couple of down days. Look at those, both those bars are green. So it's telling us that I don't care if we close lower on the day, we're still in a short-term uptrend. So you could have taken this trade and in a couple of days made 28 points. Not a bad little trade, about 10% in 2 days. All right, here's another sideways market example in TEAM, T-E-A-M. Once again, most traders seeing this display would say, I'm staying away from this. I'm not touching this with a 10-foot pole. I mean, it could go up, it could go down. I have no idea what the trend is. Well, that's because most traders are using worn out traditional ways of determining the trend. But if we apply strategy number 5, we see we have 2 sell signals, and the PET D has determined that both of them are in a downtrend because they're colored red. Even though we have 1 up green here, remember, that's not enough. We need 3 to tell us that the trend has changed to the upside. So it may look like we're going sideways, but we're going sideways in a short-term downtrend. So these are high probability setups. Potentially you could have made 78 points coming into last week. Here's an example in IDXX, okay, an expensive stock, but you could have purchased options. We're going up right at the very top. We have a buy signal, a candlestick combo example that is a high probability setup. 75 points coming into last week. Okay, let's go through the process here. All right, we're looking at charter. This is going back to September, a couple of months. Obviously, we're in a downtrend. Most traditional candlestick traders would say, well, I want to look for a reversal pattern because that's the way I was taught. And obviously, we're going lower. And what do I have here? We're in a downtrend. But right here is a bullish engulfing pattern. And this is where the students say, Steve, you know, I've always been taught, excuse me, that you're supposed to buy here. This is where you have to take advantage of this because you're getting in at the very bottom. That's the whole purpose of candlestick patterns, okay? I know. I was taught the same way. And they didn't work for me some 4 decades ago until I found out the correct way to use candlesticks. But let's say you wanted to purchase it. Well, what we tell our students is, okay, if you wanted to buy there, look what would have happened. You would have known in the next week that you had a loss on your hands. And had you not been stopped out, you'd be sitting there saying, wow, I've got a loss here. Am I going to hold on to this? Or did I just turn into a long-term investor? Do I have to hide my statements from my significant other or what? Boy, this is a big one. You would have saved yourself a lot of grief by first using the candlestick combo. Apply the pet D, and you would have seen that we're still in a downtrend. Even though you had a reversal pattern in the form of a bullish engulfing pattern, you would not have bought it because it was red. So you'd never buy that. Remember, in order to buy anything, the bar above the signal has to be green because we want to be in sync with the trend. So therefore, you just saved yourself a lot of money. And if you use strategy number 5, you'd have seen that the very next bar was generating a sell signal. So instead of buying, you actually would have been a seller and potentially could have captured over 100 points coming into October. Now, excuse me, as with all trends, they stop and they start to firm up. And as we see here, we're kind of going sideways. We have 1 green and then 2 green, and now we have 3 green. So this right here was telling us the trend is up. We don't want to be a seller. But strategy number 5 generated a sell signal right here. So most students who haven't paper traded say, well, Steve, I got to take the signal, right? Remember, you only take them with the candlestick combo when the pet D confirms it. So in order to take this sell signal, the bar below that red arrow needs also to be red. And what color is it? It's green. And students say, well, yeah, but that's a big down day. How can it be green? That's how sensitive the pet D is. The pet D is saying, listen, I don't care how low the day was. In fact, the next day was even lower. We are still in a short-term uptrend. You don't want to sell anything. So you would not have sold and taken this signal. And look, the next week, had you done that, you would have had a loss. So this is the beauty of the candlestick combo. It not only will get you into high probability setups, but will also keep you out of bad or losing trades. Okay, so let's recap what we shared with you today. Only buy or sell strategy number 5 signals that are in sync with the pet D. So what does this mean? If you get a strategy number 5 buy signal, that bar above the arrow needs to be green. That's it. If you get a strategy number 5 sell signal, that bar below the arrow needs to be colored red. Now, strategy number 5 in and of itself is a very consistent method, but when you apply the pet D, you increase your odds for consistency tremendously. That's why we call it the candlestick combo. So ask yourself, do you think these 2 methods, the candlestick combo, can help your trading for the remainder of 2022? You've only got a little more than a month and a half left in the year. How would you like to start out 2023 on the right track with a strategy, with a method that really makes you feel confident, that finally brings that consistency to your trading that you've been searching for? Well, we have a great offer for all of you attending today, a great discount, in fact. We're going to offer you our candlestick combo special. This is strategy number 5 along with the pet D tool. You're going to get instant course access. In fact, you could be up and running as early as today. All right, detailed video instruction where I teach you all the entries, all the different exits, and all the different stops for you to choose from. Remember, the reason why we provide so many entries, exits, and stops is because each and every trader has different parameters. Some traders say, well, Steve, I just don't want to buy on the close. I want to buy the next day to make sure we confirm that we're going higher. Okay, we show you how to do that. Other traders say, well, Steve, I don't like to buy it closed near the high. I'd like to buy at a little lower level, but I don't know where exactly to place my limit. We show you how to do that. There are just a number of different ways to enter. Every trader is different. That's why we give you all these different variables so that you can decide. A lot of traders say, Steve, I like to get in and out of trades. I like to trade multiple times during the day, during the week as well. So I don't need to stay in a trade for weeks or months. I need to just be in there a day or two at the most. We teach you different exits for that. Other traders say, no, I'm more of a swing trader. I want to stay in as long as possible. That's the way I like to trade. All right, we teach you ways how to do that. You see, ultimately, our goal is to provide you this smorgasbord of different variables so that you can pick and choose though that your trading makes you feel comfortable. You will never be a consistent trader until you make your own choices, because that's what makes you comfortable trading. Now, everything you saw today was displayed on the PTS Primo charting platform. We'd like to offer you, included with this great offer, a full year of our platform. Now, that will cost you close to $1,800. But if you sign up today, guess what? Absolutely no charge. We're going to give you a full year free. You're going to get a full year of our platform absolutely free. You saw during the demonstration how simple it was to click on Strategy 5 buy signals, click on the PET D. You can only get that on our platform. Now, along with this full year free of the platform, you're not just getting the candlestick combo, you're getting a host of other things I've accumulated in my 45 years of trading. So you're getting our proprietary buy and sell line. These are 4 different ways, proprietary ways to determine the overall trend. You're also getting a strength of trend tool that I developed with Pro Trader Strategies that has a great ability to tell you when a trend is running out of steam or it's just beginning, and a host of numerous other techniques and methods that I've accumulated that you won't find anywhere else, because these are things I've accumulated in 45 years and mostly taken from my trading days on the floor. But here are the 2 things I'm the most proud of, and I feel these are the things that are the most valuable. The strategy signal scanner. You can scan for PET D bars to find out which ones are green and which ones are red on a nightly basis. You can also scan for nightly signals with strategy number 5, okay? And on top of that, you're also going to get our automatic exit levels. Now, remember, we teach you upwards of 7 different ways to exit. This is just one of those methods for exiting, and we've programmed it on the computer, or I should say on the platform, so that all you have to do is click on and you'll see where these exit levels are, okay? For example, let's look at some different markets and time frames to show you how you could have scanned and used this tool. Here's the first example in the Australian dollar. Here's a 1-hour chart of the Australian dollar. I know we have some Forex traders out there, and we have a lot of students trading overseas that trade strategy number 5 with the Forex. Here was a buy signal generated just last week, okay? If we apply the PET D, we see that all the bars are green, but this is the only one that matters. So this is a high probability candlestick combo setup. Now, let's say, well, I want to take this. I just don't know where to exit, you know? Well, one of our favorite exits is called our range extension. And all you have to do is double click on the arrow and they'll appear. They're automatically generated. In this case, we have 4, okay? Now, if you're the type of trader that likes to get in and out quickly, doesn't want to stay in the trade long, you would exit either here or at the 2nd level. If you're more of a swing trader, you'd exit at the 3rd level. And if you want to get as most bang for your buck for the trade, exit at the 4th level, okay? But remember, you're in charge. It's your choice, but these are automatically generated using a calculation on our platform. So let's say you thought this was really going to take off. You decided to exit here at the 4th and final level. Well, you place a limit right here, and in 24 hours, you just made 100 pips. See how simple that is? This just happened last week on the 10th. I believe that was last Thursday. It's about 5 days ago, okay? Now, we always tell our students, especially in the beginning while they're learning this exit technique, to always exit the position entirely at the 4th and final exit, because oftentimes the trend will change. And if you see here on the very next hourly bar, look what happened, okay? This was an actual setup that many of our students took. Here's another example of an entirely different market, different time frame. Here's the monthly chart of the QQQs. That's the ETF that represents the NASDAQ 100 index, okay? Another buy signal was generated here in April of 2020. Remember that, 2020, when everyone thought the market was falling out of bed, we're going into depression right after COVID was announced? Well, right here in April, strategy number 5 generated a buy signal. If we confirmed it with the PET D, we would have seen that, yes, the bar above was green, even though we had 1 red bar before. Remember, we would need a red bar above this for us not to take the trade. But it was green, and we all know what happened coming into 2022. The market went straight up. Now, as we've started to come down in this year, we see that we've retraced about half the distance, and what do we have now? We have another strategy number 5 buy signal. But what color is the bar above the signal? It's outlined red, right? Even though it's an up bar, it was an up month. What is the color of the bar? It's red. So therefore, the candlestick combo was telling us this is not a valid setup. And look what happened after that. Let's look at another example here. Let's look at a weekly chart of Bitcoin. Now, we all know that Bitcoin has been falling out of bed, going lower and lower, right? And looking at this in hindsight on a weekly chart, we would have said to ourselves, well, sure, this is easy to see that we're going lower with Bitcoin, but I would have loved to have known well in advance we were going lower. Well, first thing you do is apply the PET-D. And what did the PET-D tell you at the end of 2021? It was telling you we're going lower. That's how sensitive the PET-D was. So there was no need to see what was going on in the news with some company filing for bankruptcy or what's going on in the world. The PET-D was telling you in November, December of last year that on a weekly time frame, Bitcoin is in a downtrend. You shouldn't be a buyer. And until you have 3 consecutive green bars, you should be out of this or you should be selling it. So let's say you were lucky enough to be out of it. You would have missed all this downside. You're still waiting for 3 green bars to get back in. But if you wanted to sell it and go short, well, there was a sell signal right here confirmed. You could have potentially made over 25,000 points. There was another one right here in April of this year, another one in June of this year, and still another one, the last one, in October, last month. So you can easily see how well the candlestick combo can be applied to any market, any time frame, and in any direction. For that reason, that's why we say a year from today, you will have wished you became a member of the Candlestick Combo course. It's time to invest in yourself. Take advantage of a great discount we're going to be offering you so you can be a student of mine in the Candlestick Combo course. All right, so let's break it down. You're going to get all these things plus strategy number 5 included with the PET-D, along with a full year of our platform. Now, usually, if you just bought this without the special discount, it would cost you over close to $5,500. That's how really popular and as expensive this it can be. But here's the discount we have today. We're only going to offer this for $29.95. Okay, you're going to save over $2,400, close to $2,500. That's a tremendous discount. But we're going to take it a step further. We're going to give you a super discount. So if you can't come up with $29.95, we're going to offer you a payment plan for less than $500 for a one-time payment of $497 and only $97 per month. You're going to get all of this included with 1 full free year of the platform. So this is a really, really super deal, because if you want to pay for it out front and still get that year of the platform, it's $29.95. But if it's still too high for your costs and your means, well, then guess what? For less than $500, you can still be up and running as early as today. So take advantage of this great offer. Here's how to do that. Contact Pro Trader Strategies. They're my sister site. I developed the platform and all of our strategies. They're in charge of the discounts and the tech support. I would suggest giving them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They would be happy to answer any question concerning pricing or putting together a payment plan, or even if you wanted to take your order over the phone, they can do that, but there's absolutely no obligation. They would answer any question about pricing or about tech support, as I said, or any other methods and strategies we have at Pro Trader Strategies, as well as specialist trading, okay? I'm gonna leave that information up there, and in fact, if you notice this link you see at the very bottom, that will take you to the info page for this special offer. It will also, if you also want, you can sign up there. And if you look in the chat box in the upper corner, you can click on the chat, and they just posted a live link. So this link you see in front of you is not live, so you don't have to copy and paste that or write it down. Just go to the chat box. There's a live link right there, and you can click that on, and it will automatically take you to the info page. Now, I promised you I would answer any of your questions. If you have any questions concerning anything I went over today, anything that didn't make sense or you'd like an explanation to, or even something else, feel free to ask me. Go to the chat box or the question and answer box, and I would be more than happy to answer them, okay? I see someone asked, I think they asked this before I showed those other examples, and this is probably one of the most common questions I get. Can this be used in other time frames? Yes, we can. I shared with you a hourly chart of the Australian dollar. I also shared with you a monthly chart of the QQQs. And then lastly, I shared with you a weekly chart of Bitcoin. And now some were buy signals, some were sell signals. So It doesn't matter which direction you're trading. It doesn't matter which market or which time frame. And you use the same basic rules. You don't have to change anything the way so many other so-called strategies do when you want to apply them to a different market. You can apply it with the exact same rules, the exact same way you like to trade. You just use the standard basic format, okay? Okay, any other questions? Someone was asking about the service, and they're saying the educational correspondence. Okay, let me just go back. A lot of people aren't familiar with that. Included with this, if we go back, as we see right here, is educational correspondence. A lot of people are unfamiliar with that term and they don't really know what that means. Educational correspondence simply means that you all get, once you become a student of mine, my personal email address, and you can ask me any educational question whenever you like. This is not my email address to say, hey, Steve, what do you think the market's going to do today? Or, hey, Steve, should I trade this or buy or sell this? What do you think? Remember, that goes against our principles. We don't believe in that. But if you have a question concerning strategy 5 or the PET D or any other technique or method, all you have to do is email me. All the questions come directly to me, the emails. They don't go to an intern. They don't go to an assistant. So I'm the only one that sees them. So there's no need to feel uncomfortable about where your email is going. And I answer them as quickly as possible. You know, sometimes I answer them within the next 5 minutes. Other times I answer them later on in the day. But I do try to get back as quickly as possible to all of my students. So that's what we mean by educational correspondence. Trust me, I would love to be able to sit next to each and every one of my students around the world and mentor them, or even phone call each and every one of them. But just because of myself trying to give webinars and teach, as well as do my own personal trading, there's just not the ability to do all that, okay? So the next best thing is to have my personal email, and you can contact me whenever you'd like, okay? Let's see, one more question. This is from a student, I believe. If you get a signal in multiple time frames, is one better than the other? Well, once again, that's up to you to decide. There is not, we teach you to take each signal on its own merit. In other words, a signal, let's say many times this will happen on a, let's say on a weekly time frame, you'll get a buy signal in whatever market you're looking at. And then on the hourly time frame, you'll get a sell signal. All right, is one better than the other? No, because each one can be correct, because they're different time frames and they're different, maybe they may be different markets. So take each separate signal for itself. Don't try to mix and match. I know we've all been taught that, well, it's best to look at different time frames and to have them line up. If there's another thing I've learned in my 45 years, that's really an urban myth. I have found no consistency in matching two time frames and making sure that signals are the same in both time frames, or making sure the trend's the same. As I said, that has never worked for me. I don't really know a lot of people that it has worked for, but from some reason, we're all taught that that's the way you have to determine a trend or determine whether a signal is valid. No, our credo, our philosophy is trade the time frame that the signal is generated on, and that's it. Okay, so if the time frame is an hourly time frame and it's a sell signal, follow the parameters for entry, exit, and stop placement. If you get another one on a weekly that's a buy signal, follow the parameters for entry, exit, and stop placement. That's it. They are in no way related. Okay, that's a great question. I hope I answered it. Very common question, but that's okay because that's the way we're taught. I know I was. When I first started trading, I was always taught to look at multiple time frames. I only look at one time frame now. For the last 40 years, I've only looked at the time frame that I'm taking the signal on. That's it. So there's no reason to overcomplicate things by using what, in my opinion, is simply an urban myth. Okay, any more questions while you still have me here? Remember, this is a great offer, but it's only being offered for a limited time. If you have the funds and you can come up with $29.95, that's great. You own it outright and you still get that year of the platform. But if $29.95 is still out of your reach, don't worry. You can, for less than $500, put down a payment of $497 with a monthly payment of $97 per month. I mean, I know some platforms that's just the platform alone. That doesn't include strategy signals or anything, that are hundreds of dollars a month. Okay, this is included with the platform, with the strategies, with the PET D for less than $100 a month. You're getting all of this. So this is really a great, great offer. Take your trading to the next level. Okay, use these elite 2 techniques to help increase your odds for consistency. And I'll be there with you every step of the way. Remember, if you have any questions once we've concluded, feel free to contact Pro Trader Strategies. There's no obligation. They would be happy to answer questions. They'd give you a quote if you're interested in another package or something else I've talked about, and they're there to help you and to work with you, okay? Now, as we close and take one last look at our disclaimer, I would like to thank each and every one of you for taking time out of your Wednesday. I know you're busy. I know you have other things you could have been doing, but I appreciate you listening to me, teaching you, and I really hope you learned something, not only about our philosophy of teaching and trading, but also about how we feel you can become a consistent trader, okay? Thank you so much. I look forward to all of you becoming students of mine in the Strategy #5 course. Have a great day, and I'll see you next time. Bye-bye.